And also, stocks are staging a retreat today, trimming back the best weekly gain since March for the S&P. And Katie Stockton is chief market technician at MKM Partners. She says the stock market is presently overbought and poised for further correction. And Katie joins us now from Stamford, Connecticut, with more. And thanks so much, Katie, for being with us.
Sure.
Okay, so let's just take, first of all, the resistance levels on the S&P and what they're flirting with. Tell us a bit more about that.
Right. So Adam was citing a 940 area, and that is indeed an important resistance level for the S&P 500. I'd say it's more precisely about 944. It's based on the January high. That's the top end of a longer-term basing phase. What I would require for a breakout from that basing phase would be consecutive weekly or Friday closes above 944. I don't think we're going to get it today. This oversold rally that we've seen this week, while it's been very impressive, it's brought back short-term and, in some cases, intermediate-term overbought conditions very quickly back to the market. So I think that's important to note, and I don't think that we're in store for a confirmed breakout as of yet in the S&P 500. That does poise us for a correction for the duration of the summer.
Okay, and can you give us a better picture as to what type of correction we could see?
Initial support for the S&P is right around 875. You can look at the 200-day moving average as that gauge. The secondary support level that I'm focusing on as a more reliable target downside for the correction would be about 845 to 847.
And tell us, step back. Let's step back a bit, Katie, and talk to us about sort of the big picture. What about support on the S&P? I mean, overall, you do see a longer-term trend. You see a bullish trend.
Right. The bullish trend is really derived from the monthly charts. If you look back to 2002, 2003, we never really broke those lows on a consecutive monthly closing basis. So theoretically, that support still is serving as a footing for the S&P 500. And on a monthly basis, we're still very oversold in here. In fact, more so than we were back in 2002 and 2003. So that poises the market to eventually break out from its basing phase, just like we've already seen in some other more high beta areas like the NASDAQ Composite and the Russell 2000. I think the S&P 500 will eventually follow suit, and for that reason would use a correction as a buying opportunity.
Hey, Katie, it's Adam. You know, you and I had a couple emails back and forth, and thank you, by the way, for getting back to me. Not everybody does.
No problem.
And we were talking a couple of weeks ago about the golden cross, you know, when the 50-day crosses up above the 200-day, and you expressed some hesitancy, and how does that play into it? Is that what you're talking about when you mentioned this 845 sort of short-term target?
You know, they're somewhat unrelated. The 50-day crossing above the 200-day moving average is a bullish development from a long-term perspective, but in reality, it's a lagging indicator. So it's a lagging indication of the turnaround that we already have seen. And of course, nobody's, ignorant to the fact that the market's up, 40 to 45% off of its lows in March. So I think it's really just a lagging indication of that turnaround, and it does not prevent, of course, a pretty significant correction in the interim before we can eventually move higher.
Okay, Katie, I also want to talk about the small cap index, the Russell index, vis-a-vis the S&P. I mean, what do you see there right now?
The Russell 2000 index, like I said, has broken out from a basing phase, so it looks good on an absolute basis from a long-term perspective. On a relative basis, if you look at a price-to-price ratio of the S&P 500 versus the Russell 2000, you can see that the Russell 2000 has actually broken down on a relative basis over the short term. So that suggests we'll see small caps underperform large caps during a correction, and that's pretty normal.
And you are also looking for a correction, I believe, in Intel. What do you see there technically?
Intel, this is kind of a situation where I would say sell the news. We saw a very impressive rally and gap higher this week on earnings, but the chart is not clear of resistance. In fact, there's important resistance based on one of my models right around 1867, and that was tested this week, and I think we'll see a failure there in Intel.
Okay, Katie, good to see you. Thanks so much for joining us. Katie Stockton of MKM Partners talking technicals in the market.